Welcome in, whiskey freaks, to the Blind Tasting Podcast, your number one attitudinal bourbon destination. I'm John Stark, and I'll be bringing you candid and sometimes irreverent whiskey news, opinions, and reviews on the industry and the products they've been bringing us for hundreds of years. So, here at the Blind Tasting Podcast, we usually judge bourbon and whiskey using our taste buds, but today we're going to be using stock charts because we're doing something a little different today. We're diving into the business side of bourbon. We're looking at some of the big players in the whiskey world whose stocks have all taken a big hit over the past year. Now, before we go any further, this podcast is not financial advice. I'm not a stock expert. I'm a whiskey freak just like you guys. I'm not telling anybody what to buy or anybody what to sell here. I'm just here to have a conversation and share some observations. And for full transparency, I do personally own stock in MGP Ingredients and also in Brown-Forman. It's not a recommendation for you. That's just a disclosure for me. Anyway, I believe by looking at these titans in the whiskey world, we can see how they're navigating the market, and then maybe we can get a glimpse into the future of the whiskey industry as a whole. So today, we talk with somebody who's basically a finance genius and an economics guru. He's worked for an investment counsel in a state I will not name for privacy purposes, and he's now at a Fortune 250 financial services company. We've had him on the pod before to discuss the big, beautiful tariffs, if you remember. And suffice it to say, he's got his finger on the pulse right now, and he's got some views and some ideas on the stock market as it relates specifically to whiskey. Welcome back in, Braden, to the Blind Tasting Podcast. I'm really glad you could make some time to talk about the industry in general, and maybe we can even drill down just a little bit and talk about a couple of the big boys and see where they're at, and maybe we can even touch on some craft distilleries. The industry as a whole has been in turmoil. I think that's a fair way to phrase it in the last year or two. And I want to bounce some questions off you today, specifically about some companies and then broadly about the industry. And I'm just going to jump right in.
Sounds good. Thank you for having me.
So we've seen a bourbon boom for more than a decade, honestly, but now, and we're going to be talking about a couple companies in Brown-Forman and MGP Ingredients. These stocks specifically are down, and that reflects really the entire industry that's struggling with demand. And we've got this huge whiskey glut right now. They have a tremendous amount of product on hand. And what I really want to know, and I think a lot of the whiskey freaks out there want to know too, does that mean the boom is fading, or is this just a rough patch in an otherwise healthy long-term trend?
Yeah, so of course, thank you for having me again. And before we talk about that, I want to drill in specifically into the two big players. Like he mentioned, Brown-Forman and MGP are the two largest publicly traded companies within the bourbon space, so that's where I focused a lot of my research. And those two stocks are down about 60% in the last 5 years. So their stocks have more than halved in the previous 5 years. Now, in order to understand that, obviously their sales haven't gone down 50% in the last 5 years. Their sales have not halved by any means. But the stock market is essentially a prediction market where people are betting on the future performance of these companies. And if you think 5 years ago, the future outlook for these companies was great. Everybody was locked in their house and people had nothing to do but sit around and drink whiskey. People were figuring out how to pass the time. And all of a sudden, just like Zoom and so many of these other work from home trends, it seemed like bourbon drinking was on the permanent rise. However, 5 years later, work from home is hardly heard of anymore. Most people go back into the office. Zoom stock has crashed back long since its previous highs. And whiskey drinking has also renormalized. And like I said, so many people thought these trends wouldn't normalize, but 5 years later, now they have, right? And there's two big issues that are facing the overall whiskey market. One is short term, which as you mentioned was the supply glut facing a lot of these companies. And the second is long term, which is the future outlook on alcohol drinking. So I want to first start off with the short-term supply glut that you mentioned. While it's great for consumers, as consumers are going to be getting older whiskey for cheaper prices, it's bad for these companies, as they have so much supply that they're forced to either A, market premium brands for lower prices, or B, just go ahead and try and discount it as much as they can to sell it and not even let it age up to being premium whiskey. So that is kind of the short-term challenge, is when these people are forecasting demands, they have to forecast demand years and years in advance. And 5 years ago, it looked like work from home would never end. It looked like the pandemic would never end. So people were really making these forecasts for the assumption that the COVID-style economy would continue, which, as we know now, was nothing more than an aberration. So now all of a sudden these companies are left with massive supply gluts that that don't seem to be fading anytime in the future. But that's only a near-term problem, and that wouldn't cause a halving in these stock prices. The other worry is Gen Z, my generation, is that my generation just seems to be drinking less alcohol. And that's a big problem if you're a whiskey brand. A lot of consumers my age are choosing not to partake, or to partake less often, right? Oftentimes alcohol is seen as a social drink, and my generation has a well-documented loneliness epidemic. So if people aren't getting together as much, then there's going to be less alcohol drunk in these situations. Premium alcohol was often seen as a social status, right? If you think about all these movies back in the day, they would have a glass of bourbon and that would cement their status. But a lot of high-profile people today are choosing not to partake, and almost seen in the same light as having those type of drinks. So there's a lot of uncertainty about what the future of alcohol consumption is going to look like in 20 years. So I think it's just as much this long-term pressure about consumers my age as it is this short-term supply glut. Because again, alcohol sales and whiskey sales, the sales of MGP and Brown-Forman, they're not down 50% like the stock prices. They're not down 60%. But it's a forecast on the future, and a combination of this supply glut and the future generations' propensity to drink is really lowering the expectations on these companies that 5 years ago looked like whiskey was in a new boom era.
So I guess I'm gonna pile on there with you. You were mentioning that Gen Z simply just choosing maybe not to drink as much, and from my understanding, there are other alternatives now that are legal in 29 states or 30 states at this point, so you can enjoy recreational drugs. And I know that ready to drink is picking up the pace, whereas you may not buy a bottle of whiskey, but you may buy a cocktail in a can. And are you seeing that in the world that you're in? Is that a thing, or is that just something that we're reading about?
Well, again, I actually did some research as to how marijuana usage was factoring into alcohol consumption. And while I couldn't find any concrete studies that said anything about that, it just makes sense logically that more people are turning to recreational drugs instead of alcohol. That just makes sense to me. And while I surprisingly couldn't find any data to confirm it, that wouldn't surprise me in any means.
Yeah.
And at least seltzers have really piled onto the market. I think seltzers have more affected beer than they have cocktails to a certain extent. I know mostly women really partake into seltzers, and so that they will switch over from fruity cocktails to seltzers. So that makes sense to me that seltzers, twisted teas have kind of shouldered their way into the market, and that can be a real problem for these whiskey brands that can find it difficult to make a ready-to-drink alternative than just a bottle. I mean, a bottle, that's what you drink. It's difficult because instead of making a cocktail in a bar, now you have to make a cocktail in a can, which is difficult for a lot of these whiskey brands.
And I've also heard that some of the other pharmaceuticals that people are taking now for weight loss, like Mounjaro and some of the other brands that are out there, they're actually causing folks' bodies to not be interested in drinking. It's very intriguing, actually, but I've seen that data out there too. So you've got an increase in folks who are potentially switching or not even venturing into the bourbon space and enjoying marijuana or edibles or those types of things. And then you also have folks getting on these, are they lipids? Is that what we call them? Do we call them lipids?
They're called GLP-1s.
GLP-1s.
Wegovy, Ozempic, Mounjaro.
Right.
Those are the big three.
So that's got to be, I think the marijuana use, over the last year or two is up either 24 or 25, 26%, something like that. So at any rate, so I think we've ventured down that path, and I think we found that some of the things that could be impacting supply and demand are those. But I want to dig down a little bit into each one of these companies. Now, I mentioned in my intro that I do have shares of stock in MGP Ingredients, that company, as well as Brown-Forman. So full disclosure. And again, this is not financial investing advice, although Braden does have a finance podcast that you can listen to, and I'll let him plug that at the end. But we do want to understand what's going on at the company level of Brown-Forman and MGP to a certain degree. And that will help us because they're so big, understand the market or the industry in general. So MGP specifically, they've had some strong growth in recent years. I think 2023 was a good year. But in 2024, they had some bumps in the road. In fact, they closed their Atchison, Kansas distillery. Now, they mostly made grain-neutral spirits at that distillery. But their stock is down. Their stock is down here in the last year by something like 58%. Listen to that, 58% in the last 12 months. Now, some folks are wondering, is this still possibly a growth story? Or are there some warning signs investors should take seriously about MGP in particular?
Yeah, I'll say MGP is a fairly interesting case because generally, as we've already covered, and I think it's pretty clear, the bourbon boom is now over, or at least it's very, very clearly on temporary halt for the near future. And generally, in times of austerity for these types of industries, generally you see a consolidation. So a lot of these craft breweries that are, using MGP, using their services, are oftentimes being closed or being bought out. But the interesting thing that I found in my research is if you're looking for growth in the bourbon space, a lot of the growth can be found in these smaller brands. So it's kind of an interesting paradox that we'll kind of see play out, whether they're able to do better or worse as the consolidation of their target brands kind of emerge. And that's kind of an interesting thing that I've noted is usually you see a consolidation in these types of spaces, but the bigger players are actually suffering, it seems, a little bit more than some of these smaller guys.
That's interesting.
In some of the research that I've noted. So again, it's kind of a paradox between those two forces, and it'll be interesting to see which ones prevail. Because in my research, I found a lot of smaller distilleries closing, but I've also found an equal number of sources saying that smaller breweries are the ones doing the best, or smaller distilleries are the ones doing the best. So, we'll see what it looks like on the ground, because it could be an opportunity. If that's where the growth is, because those are MGP's client base. So that could be good for the business. Or if we see that consolidation continue, they may run out of customers as they may get bought out. Their customers may get bought out by bigger distilleries who can do their own distilling and wouldn't need MGP's services. So it's a bit up in the air. If I had to make a prediction, I think this is going to be a pretty big consolidation event. I think we're going to see a lot of the bigger players taking bites out of these smaller guys to beef up their portfolios coming out of this supply glut.
So along those same lines, and I'm going to jump over to Brown-Forman, and for those of you who listen to the pod on a regular basis, Brown-Forman, they've got the legendary brands like Jack Daniel's. You don't get much bigger than that. Woodford Reserve, Old Forester, and their stock has also taken a huge hit in the last 12 months. I think they're down something like 40%. Now, to me, that's an opportunity. That's just the way I look at things. But what I'm worried about is how much upside do we think they have left at this point? And keep in mind, they're big internationally. So is the overseas whiskey demand, is that still growing? And if it is, maybe that does lend to more upside with Brown-Forman in particular.
Yeah. As I mentioned a little bit with MGP, in times of austerity, and when
you say austerity, that's a big word. I'm not sure everybody knows what that is, especially people with infinity bottles. So austerity.
Austerity means times of hardship. So basically, as we come out of this COVID boom that the whiskey industry was having, it'll be a tough time, as a lot of these distilleries are finding out with their large excess supply and not being able to move that. So again, I think this could be a solid opportunity for Brown-Forman to be able to pick up some struggling distilleries and kind of beef up their production model, beef up their brands, their portfolio. Maybe. Yeah, their portfolio of brands. Again, like I said, Brown-Forman is kind of facing a similar issue, except because they do their own distilling, it impacts their brand specifically, where they're seeing a supply glut in their brands, so they could be losing some of that premiumization of their whiskey as they're forced to either A, hold on to it longer, or B, sell it at lower prices, which compresses their margins. One interesting thing that I found is due to a lot of the tariffs that are going on and to some other factors, Canada is actually going to be taking a lot of Brown-Forman products off the shelves, which they said is a decent impact. Now, Canada only accounts for 1% of their sales, so it's not a huge deal and they can weather it. But again, losing shelf space to these companies and these brands is even more dangerous than having to raise their prices.
Right, and if you lose those customers, people are not going to just stop drinking, right? If they liked Jack Daniels and Woodford, and those are products that Brown-Forman is going to routinely give them in Canada, and they take them off the shelves, and many places in Canada have, depending on what province you live in. It's funny. They're not going to just stop drinking. They're going to seek out another whiskey, right? And then if you've lost that customer potentially, unless they're really brand loyal, you may have lost that customer for good.
Yeah, it's difficult as a consumer. Like you've got to really, really, really enjoy that product and only that product to go seek it out after the fact. Because most people will just switch to an alternative that's probably just as good or, slightly worse, but better off convenience-wise.
It's kind of like Coke and Pepsi. You may not be thrilled, or Sam's Club, right? Their soda. You may not love Coke, but if Pepsi goes up $2 a case, we might switch over to Coke.
Yeah.
Well, let's talk about, and we're getting near the end of the interview here. I want to talk about how each company is building for the future. And we know that MGP, they're in a cost-cutting phase right now, and they're buying smaller brands. They did close the Atchison distillery, like I said, and we know Brown-Forman is actually doubling down on production, which I don't understand that. I want to mention Pernod Ricard. I know we haven't talked about them today, nor are they traded in the United States, but they're actually expanding by acquiring United States whiskey brands. So out of these strategies that these three titans, I guess you would call them, in the industry, which one seems best suited for long-term success based on your research in the economy that we're in right now?
So I think there's pros and cons of each of these strategies that these companies are instituting and that I want to double down to a little bit more. Again, I like MGP's strategy of buying up smaller brands. I think this is a good time for consolidation in the market, so I can appreciate them doing that. And then cutting costs to get through this austerity. That makes sense. It's a pretty cut and dry strategy. It's worked time and again, and they'll probably be fine, but we'll see where that goes. You hate to see them cutting back, again, especially for those workers involved, but it makes sense. It's a tried and true strategy. Brown-Forman's strategy, I think, is a lot more interesting. If you look at them doubling down on production and their emergence into the ready-to-drink market with canned Jack and Coke, which was a huge success when it launched a couple years ago. I think their strategy is really interesting because, again, they're trying to predict demand in 5-10 years. They're not trying to predict demand right now. So they're predicting that whiskey demand is going to be back above where it is right now or to be continually growing in order for them to get out of this supply glut and to be able to sell their new whiskey. And while I can appreciate the bold strategy and not just doing what everyone else is doing or what MGP is doing, which is just cutting costs and moving on, it's a very bold strategy, again, considering the research I've done on the Gen Z and the younger markets who are going to only get wealthier and wealthier. Because that's another big thing, is Gen Z is starting off much lower purchasing power out of college and starting the workforce than their predecessors did. So even if Gen Z did have as much money, or even if they were as interested in whiskey as other generations were, they just have less money to buy them with. So that's the first thing that a lot of people are going to be cutting. So Brown-Forman is making a strategic bet that not only is this whiskey supply glut's going to be over, but that Gen Z is looking to drink whiskey and are going to be increasing their purchasing power going forward. So it's an interesting strategy. Again, I love the ready-to-drink stuff. I think the canned Jack and Coke is a great idea. It was a very successful launch, and it's something that they're very much rolling with. And I can appreciate this doubling down on production because, again, they're not trying to sell the things they're producing today. They're trying to sell it in 5 years. So again, if Brown-Forman had decided to cut production, which seemed like a bad move 5 years ago, if they decided to cut production, they would actually be dominating the industry right now. So who knows, maybe by increasing production now in a time when that looks stupid, maybe that'll provide them a competitive advantage in 5-10 years. That's interesting. It's more of a risk-reward strategy. And then Pernod, I'm not as familiar with them because they're not traded in the U.S. markets, but again, that's another long-term bet on whiskey, which is interesting considering a lot of the data coming out on Gen Z about their willingness to drink alcohol and whiskey more specifically.
Well, you mentioned Jack Daniel's quite a few times in that little bit, and this year Jack Daniel's introduced a 14-year release, and that's unheard of. That hasn't been. I'm trying to remember if it's ever been done. 14-year-old Jack, I believe it's 14-year-old Jack Daniel's. So they've got old product in the warehouses, and folks are clamoring for that. At least folks like me and the folks that listen to this podcast. Eagle Rare 12 just launched earlier this week, and that shows Buffalo Trace also has old stock. They have all this old whiskey in the warehouses now. They only raised the price of Eagle Rare 12 by a handful of dollars from Eagle Rare 10. I think Eagle Rare 10 at the distillery was $36. Anyway, they didn't raise it much. It's $49.99 for 12-year-old 95 proof whiskey from Buffalo Trace. And that's incredible. So no matter what happens here, we're benefiting from it. And I kind of feel, I don't know if it makes you feel dirty, but you're kind of glad for it because you're getting this amazing, older, fantastic whiskey. And at the same time, the distilleries are struggling. So it's you're kind of torn, you're kind of happy and kind of like all at the same time. So anyway, one thing we can agree on, no matter what, we're benefiting from this particular situation. So let me hit you with one more question. And you kind of touched on this earlier when we talked about the craft distilleries, but I'm wondering if rising craft whiskey brands or shifts in global demand, if that could shake things up for the big guys. And you kind of answered that question before. I'd like you to kind of revisit that. And I also want to know if that competition would help push innovation or it would start chipping away at the dominance of the big boys. If the craft whiskey distilleries could achieve that. And again, in the climate that we're in right now, a lot of these smaller guys, and I know we kind of talked about this a few minutes ago, but I want to revisit it. I've got a list here. Devil's River Distillery in Texas, they just filed bankruptcy last week. Colorado-based Lee Spirits filed bankruptcy. Montana Distillery, they produce a dozen varieties of vodka and gin and whiskey. Folks like Boston Harbor Distillery, I think that was last week or a couple weeks ago, they filed bankruptcy. These are craft distilleries, and they're really struggling. So what are your thoughts on that? And that'll be probably our final question today.
Again, it's an interesting setup that I found in doing my research. Like you said, there are tons of craft distilleries in these places closing. But at the same time, if you look at market share data, Jim Beam, for example, is actually losing market share. So if the biggest player is losing market share, where is that market share going? And it's going to these smaller craft distilleries. I think it's a combination of it's like that effect where the news only reports on bad news because that draws the ratings. It's probably a similar effect here where you're only really hearing about the bad distilleries because they're the ones going out of business and making newsworthy news to be covered.
Right.
You don't see articles going, wow, this distillery is doing great. Nice job, guys. You hear, oh, this distillery is going out of business. So I think there's an equal combination of those two factors. Again, it's kind of a paradox where you see all of these distilleries going out of business, but then you also see big players losing market share. And if the big players are losing market share, that means that the smaller players are gaining market share. So whether it's these mid-market companies that are gaining the market share or these smaller craft distilleries, I couldn't quite discern from the data what exactly that looked like, but I can tell you that it's just a weird paradox where we probably will see some more consolidation. I'm surprised we're not seeing consolidation already. It seems like the big players are letting a lot of these smaller guys just go out instead of buying them. So we'll see what happens. And again, it's kind of, you can see it from the strategic level, but it just depends on what each of these individual companies decide to do on the tactical level, whether they decide to make these purchases or not. But it's weird because on one hand, like you said, it seems like a lot of these craft distilleries are going out, but on the other hand, it looks like there's a boom in craft distilling. So I think that comes down to a lot of the tactical level of what these individual distilleries are doing.
Okay. Yeah, and I think it was last year, Campari Group, they own Wild Turkey and some others. They and you've been there with me to the Wilderness Trail Distillery there in Danville, Kentucky. Campari Group bought them last year. So there is some consolidation going on, but I like you were saying, it does appear that there are quite a few out there that they're either floundering or they're just going out. Or maybe it is that news thing where you only see the bad news. I mean, there are, I don't know if it's 1,600 craft distilleries in the United States, something like that. So I guess if we see a handful of them filing bankruptcy in the news, that's probably maybe that's painting the wrong picture. So I think that your take on that might be spot on.
Yeah, that was kind of what I could discern is those things, and then those trends within the broader industry. And those long-term trends, it remains to be seen if those shake out or if Gen Z and the younger generations do decide to partake in drinking to a certain extent and they're able to get their purchasing powers up to be able to afford those products. Because again, whiskey is a premium version of alcohol. So if these consumers are younger and are not as and aren't as wealthy, then they're going to prefer lower cost alternatives like Busch Light to whiskey.
So I lied. There's one last question. So, of course, this isn't the finance podcast. You have the finance podcast, and I'll let you plug that in just a minute. But if you were to give financial advice, let's say you're just giving it to me, right? Nobody else listen here for the next minute or two. Is Brown-Forman and MGP, are they buys right now? Are they holds? Are they sell? Are they just stay away from it? What are your thoughts? Final thoughts?
I think it depends on your risk appetite. I like seeing things like this down 60% because they are staples. They're not going to go anywhere in the near term. So being down 60% feels like a bit of an overreaction to me. I always prefer to side on the quality aspect. So for me, I'm going to be buying bigger players like Brown-Forman that I would over MGP because I just worry about the financial health of these smaller craft brewer distilleries. And if these craft distilleries are being bought up by either A, companies that can do their own distilling, or B, just going out, I worry about MGP's ability to have a large base from which the contract to distill for. So I always lean on the side of recognizable brands. They don't say a whiskey and Coke, they say a Jack and Coke.
Right.
So in my head, I always lean to flight for quality and like the bigger players in a space. But I think there's definitely some interesting ideas about buying the bottom here on these whiskey brands.
Okay, and do you want to give a plug to your podcast?
Yeah, absolutely. If you're interested, I run the podcast Financial Files, where I talk about first personal finance tips and also important financial history that I find interesting and I think is important to understanding the financial world that we live in today.
Well, great. Everybody tune into Financial Files, and Whiskey Freaks, don't forget to continue listening to the Blind Tasting Podcast, your #1 attitudinal bourbon destination. See you soon.
Bye-bye.